Hello and welcome everyone to Almus Market Mornings, your daily dose of global financial updates. What we love about financial markets is the changing narratives and its impact on prices. If you look at July, USD INR opened at 78.98. At that time, the narratives were ongoing regarding strong inflation in US, Fed being aggressive in hiking rates, and crippling euro due to the war. We closed the month with a good correction in prices after hitting a high of 80.05. We closed July at 79.25. The narratives now are regarding Fed being cognizant of growth challenges, hinting at support if required. A bit more dovish than previous commentaries, which supported risk assets and some appreciation in rupee. JK, good morning. Given the slight change in the stories around the dollar, what is your outlook and what updates do you have for us?
Yeah, good morning. Uh, so let's start with the global markets. Global markets actually took a pause, having moved big in the last 1 week, but that's quite reasonable because there are still uncertainty whether we should be looking at a recession or further tightening in financial conditions. Because while consumption is slowing, GDP is slowing, at the same time, we are also seeing inflation has not come down, at least as far as the data that were seen last week from Europe and US are concerned. So stocks cannot have it all one way. It has to have, two-way moves, and that's what we have seen yesterday, some sort of a correction. And recently, most of the moves were also driven by good corporate numbers from some companies like Amazon and Apple. Now, but the actions have actually shifted to the currencies now. You would expect that currencies would hold a range when so much is there on the plate and so many data and economic events are ahead. But actually, the sheer positioning and change in bias after the Powell press conference, after the last week's Fed meeting, has seen dollar on a big slide. The staggering fall of 9 biggies in the dollar yen is the result of the most crowded trade I have seen in some time to remember. In fact, to repeat, none of the currencies are moving fundamentally. Euro has risen, although there is a contraction in PMI number and reading below 50. German retail sales falling 8.8% year on year in real terms in June, the weakest since the index began in 1950. That's for something to look at. But what has happened is euro has broken 1.0280, although it's still trading around that level. But euro has gone up. That's what is notable. You would have thought that we would have gone to parity, but that's not the so. So it's all about the position adjustments, at least in the currency markets. Stops feeding into the moves more and more. Again, it's usually, as it usually does, the Chinese yuan has stood out as the weakest currency with the multiple challenges for the economy. PMI falling sharply again. Then there was the news that US is considering a crackdown on chip makers from China that could widen the tech conflict between the two countries. This has been dampening the you know market, particularly in China, while they were actually expecting a removal of tariff by the US. Now, look at the rupee. There's no disappointment for the traders as as it has had its own share of volatility. Sentiment has, of course, played a big part in the rupee trade, which has turned quite a bit in the last few days, and none more so than the flows that have changed. In July, we saw a small positive flow following continuous negative flows since last October. And what has happened in August is a decent inflow for the first day. And the equity markets have built on last month's gains to record about 14% from the low of the June. So that's a very impressive uh, number as far as the Indian stock market is concerned. Also, one more impressive number is the PMI data that came in India at 56.4, and compare it with the PMIs of so many other regions where either it has fallen or even gone into contraction territory. So dollar rupee, at least for now, was not getting any support to go up, and the rupee has actually fallen nearly 1.5% as the offshore tested the 78.90 also yesterday. See, when rupee gets such momentum, it's hazardous to call for a low, as the all buyer scenario changes into all sellers scenario. So I can only point to some levels like 78.80 or 78.40. Key once again will be where buyer will come back. And unfortunately in India, that needs a initiation from RBI only. So when we see RBI coming in and mopping up flows again, that's when we think the market will turn, and it may not be too far from these levels, because they would also not like the rupee to be strengthening beyond a point when there are still challenges of trade deficit. By the way, we'll have a trade deficit data for July, the preliminary number today as well. In terms of data, we have a very busy week this week. We kick off in RBI Reserve Bank of Australia meeting, another 1.5 hours. Expectation for a 0.5% hike. Interest is where the terminal rate is going to be, which is now gone up to 3.35 from 2.6 earlier. RBI starts its 3-day meeting tomorrow, concluding Friday. They go in with much less worry this time, as not only domestic inflation seems to be stabilizing, and even global inflation expectations have come down, although the actual numbers have not come down. Consensus and our view is between 30 and 40 basis point hike by RBI. Then Bank of England announces the rate decision. Again, seems all agreed about 0.5%. With mellowed expectations of future rate hikes by the Fed, none of these central banks are actually expected to go for aggressive hikes. That is what I strongly feel. There is, of course, going to be equal, if not more excitement from the data points, which include the India's preliminary data, as I said earlier, US JOLTS job opening data, S&P services PMI for major economies, that's tomorrow. Eurozone retail sales, German trade and industrial production. And to top it all, the jobs data from US that will be weighed against the Powell's statement that the job market remains still very strong, expecting a much less increase of 223,000 compared to 300 plus for several months. Of course, it overshadows the Canadian jobs data, which is due on the same day. So all focus on some of these data points, but currency market doesn't seem to care, and it's still in the process of adjusting the positions. Probably that's how it will be for the rest of the month, or for most part of the month, until something big strikes the market. Yeah, we are having interesting times ahead. Go ahead. Thank you.
Thank you, JK. And it was quite insightful, especially the fact when you mentioned that any sort of buying in rupee has to be initiated by RBI. Like that's usually the case. That was quite insightful. And of course, such changing narratives, it always causes volatility in prices. As we are seeing, as JK mentioned, recession fears are continuing. And we have a lot of events, especially in the domestic market. We have the RBI MPC meeting. So keep managing your risk. We'll see you all tomorrow with the latest round of updates. Thank you.